All right, we're here with Professor Seyhun, and we're going to talk about Trump tweeting about Iran and sort of insider trading surrounding that. So, why don't we start with the March 23rd activity where Trump basically threatened to take out the power plants, and then he basically said there was some kind of deal, but Iran denied that.
Yeah, on March 23rd, Trump basically said there were talks to end the war, which Iran denied. And the interesting thing about that is obviously that's very market sensitive information. It would move oil markets, it would move the stock market by a huge amount. That tweet came a little bit after 7 o'clock, 7 a.m. on March 23rd. So what happened was that was a Monday. What happened was 15 minutes before then, there was a huge activity in both oil futures and S&P 500 index futures. So something like $600 million worth of notional value oil contracts changed hands, and 1.2, no, about $2 billion of notional value of S&P 500 index futures got traded within 15 minutes prior to Trump's announcement. So the question is whether uh, that was done randomly or that represents inside information. So my overall assessment is that is definitely insider trading. We'll talk more about it in a little bit. So why am I saying that? One reason is it's very unusual at that time of the morning to have this kind of trading activity. That's 7 to 9 times, 7 to 10 times normal trading activity. It's highly statistically significant. It requires huge, about $160 million of margin posting. So it's not something any one of us can do. Somebody needs to post $160 million of margin. And the fact that it came so close to the announcement suggests they didn't really have much time to spread this trade over a longer period of time to hide it. So it came, they learned it, and immediately they had to trade. So it was something that was learned that morning, and which led to an immediate trade before the tweet itself. So it's very suspicious. Again, as I said, it's highly statistically significant. It led to something like 60 to 90 million dollar profit in a very short amount of time. Um, and so the question is this insider trading? Certainly, if this was involving an individual stock, that would be insider trading. But these basically represent futures contracts, and the rules are different. Regulators different, rules are different between the stock market and the futures exchanges. So both of these took place on futures exchanges. And the rule, so for futures exchanges, the regulation is done by CFTC, whereas for stock exchanges, the regulation is done by SEC. So those are two separate regulatory bodies, and they have different rules. Normally, which may come as a surprise, is insider trading on futures exchanges is not illegal. To repeat, it is not illegal. Somebody could trade on material non-public information on futures exchanges, and that is not considered illegal. Now, obviously, to get the nuances here, we need to go into the details. So if somebody trade on futures exchanges in breach of a pre-existing fiduciary duty, then it's considered illegal. That violates Rule 180.1 of the CFTC rule. So that would be illegal. So if somebody in White House violated, and they were government officials, they violated a pre-existing fiduciary responsibility. So this information belongs to their employer, White House, and traded, that would be illegal under existing rules. Um, so let me just leave it at that one. There's also exchange rules. So in this case, CME, Chicago Mercantile Exchange, is where the trades took place. And exchange has more broad anti-fraud, no front running kinds of rules, which this would violate, whether the person was employee of the exchange or not. So it basically undermines the um, integrity of the futures exchanges, and as a result, futures exchanges regulate this kind of trading. So it would definitely violate exchange rules. Um, so to some, is it illegal? It depends on who did it, what they knew, where they got the information. It would almost certainly violate CME's rules. Whether it also violates CFTC uh, rules, it depends.
Okay. And what if we move on to the April 7th ceasefire tweet? So were there any signs of insider trading there?
The most recent one,
Yeah.
April 7. I looked at those. It doesn't look like, again, the tweet, namely ceasefire tweet, came about 6 p.m. on April 7. It basically says we have an agreement for a ceasefire, and the um, oil prices, in fact, were increasing right up to 6 p.m. And they took a sharp fall after the tweet. So there is no suggestion, there is no information that that was somebody basically front run that particular tweet. Again, there might be, in that it was small amount that didn't affect pricing, not like $1 billion, $2 billion worth of trade would change the direction of the prices. So in this case, prices didn't change direction. They were increasing slightly up to 6 p.m. and they continued that way. So if there was, it wasn't a meaningful large trade. But so there's no evidence at this stage that some insider trading took place prior to the April 7 um, tweet as well.
All right. Anything else we should cover about this topic?
So insider trading on the stock market, obviously, is very different than the one on the futures exchanges. A lot of people are surprised that the regulations are different, the rules are different. Something that might be illegal or taking place on the stock exchange may not be illegal taking place on a futures exchange.
All right. Well, thanks, Professor.
My pleasure.
Talk to you later.